This is our Forex trading blog for February 18th, 2011. As we do most days, you want to look at the currency meter and find out which ones have the weakest daily, weekly, monthly trend and trade those against some of the stronger longer term trends if the real-time momentum shows. You can see extreme weakness here starting the day off in the dollar, and let's see which the Australian here had decent strength at the time. The daily trend was up. Unfortunately, there's no super strong weekly, monthly trends to trade against, but so you'd have to go, with the real-time momentum here. And so you're looking to buy the strong Australian versus the weak dollar. Coming into today, you can see yesterday the market exploded up. We have a very narrow range pattern right here. If you're looking to scalp, this went sideways long enough that you might have bought this breakout, that NR7 pattern right there in the hourly chart at 15. Previous day's high is up here. Because it went up significantly the day before and it was above the upper containment band, a lot of times these act as resistance, and it doesn't really take off through there until a few times touching it, and once all the selling's over there, as you can see later in the day, it took off. But so if you bought this breakout right here on a scalp basis, this was your profit target, and it never really went above that. Another trade that's usually good when you have a strong trend is when it comes down to the hourly and takes off. So you might have got into a trade right here. You can see there wasn't that much weakness on the pullback, but it never really took off, and once it started to go back up, you move your stop up. You might have lost 4 or 5 pips on the scalp there. Later in the day, the market really never had that much weakness, and the longer term trends up. When it was hovering here at the hourly and finally broke out 11:30, pretty decent trade. You can see at 11:30, again, extreme weakness in the dollar here, and one of the stronger ones was the Australian. And because the resistance earlier in the day was hit so many times, it eventually went through that level, and you'd probably still be in this trade. The 50 level up here is pretty decent profit target. That's about a 30 pip move right there. Earlier today, the euro became super strong and the dollar was weak. It exploded up. There probably wasn't too many good trades to be had as this thing exploded up, but the pullback to the previous day's high, when it can't go underneath there and starts to go back up, you'd get in. You might have got out of your trade here at the previous high with a small profit, and then when it broke out of here, you get in it again. It's right at the fib target right now, and it has a little bit less momentum than it had before. So I personally would be looking to get out right here, and aggressive counter trend traders could consider a scalp trade there. Using the new FX Scalper Pro, when this got really strong, especially when it broke the hourly right here, there might have been some trades on the scalp basis. So we'll bring our tick chart up here and scroll back around 8:30 to see what this looked like. Yeah, you can see the market kind of took off. It was above the hourly. There was quite a bit of resistance right above the hourly, like the weekly pivot, previous day's high. So if the resistance wasn't there, you might have taken that trade here. I don't think I would have taken that. It's usually a dangerous thing to do, buying right in front of a likely sell area. But conversely, when the market pulled back down to the hourly, once it did break it, using a tick chart for precise entry is usually pretty high probability trade. When it came down here, it actually broke the hourly, wasn't able to make a lower low. You might have got into a trade right here around 20. That went up about 15 pips. The new scalping tools are pretty fast. And you can see it's inching its way up, pulls back, doesn't break this low here. You might have given it another shot right here. And once it broke above that level, draw your fibs on the previous swing to get an idea where the fib targets are. And you might have exited your trade here or here, somewhere between 50 and 60. Hasn't really moved too much more beyond that at this point. The New Zealand really has an extremely weak weekly and monthly trend. Most of the New Zealand pairs are kind of chopping around, going sideways with no direction. So for that reason, I would kind of pass on that one. The pound also was extremely strong today, and it didn't have the extreme weakness in the weekly and monthly trend that the euro had. At 3 o'clock, the weakest one between the dollar and the yen was the yen. So you'd be looking at pound yen buys, and you can see this one also exploded up. Longer term trends up. And this is where the FX Scalper Pro can help you decide whether to stay in a trade, tighten your stop, or get out. Let's scroll back to that time when this took off. And you can see the market, was pulling back. It didn't have that much statistical weakness. When it broke out of the hourly right here, pretty decent place to get in. And if you expect, a decent sized move, and the pound's one of the strongest and the yen is one of the weakest, every time it goes up and pulls back, move your stop up underneath each swing low. And oftentimes the previous day's high is a resistance area, so you want to be really careful there that you don't have an explosion down, or you might even exit half your trade. And after that point, draw your fibs on the first wave to get an idea of where the profit targets are. And you can see at these fib targets, it's really dark green bars. This is getting progressively stronger. Hits the second fib target, and it's right near our upper containment band. You might have exited your trade up there somewhere around 16, and you bought the breakout over the hourly moving average down here around 75 for a very decent trade. And if you're, a real quick scalper, after a decent sized pullback, I'd say 15, 20 pips, 30 would be better. Go long when it breaks the trend line. Pulled up a little bit. You can see it's still extremely strong. So you're waiting to see if it can take the highs out. If it does, you want to hang with it. Otherwise, on the scalp basis, you might get out somewhere near 15. After the spread of that one, it might only be 8 or 9 pips. But, super strong currencies tend to continue their trends. The Swiss was also pretty weak earlier in the day. We had a little bit of strength in the yen, but the longer term trend is just extremely down. Right now, most of the longer term trends and most of these are down compared to each other. Obviously, some currencies are weaker than others, in comparing them to just one currency, not the whole basket of currencies, which is what we do. Most of the time you have, some currencies that are super weak longer term and other ones that are super strong. But every once in a while you get a pullback, and there's quite a few strong or weak currencies altogether. And when that's the case, you got to trade based on the real-time momentum. It's definitely harder to trade. There's less likelihood of a continued trend, and most of the time you're going to be taking quick 5 to 25 pip moves and exiting, because the likelihood of huge moves is gone. It is not there.